Hello, I'm John the Crypto Scalper. I have 20 years as a professional trader in FX and I wanted to bring that experience over into the crypto world. I'm going to do a series on technical analysis and looking at Bitcoin crossed with dollar or Ethereum crossed with dollar price charts to look at what I've noticed and how they may be similar or differ to the FX markets. First part I want to look at is head and shoulders with a specific view at volume. If you have a look at the chart that's attached, this is a chart from March this year, 2021, of Bitcoin dollar. And I want to bring your attention to the volumes at the bottom to show you what is happening when we potentially get a top or a bottom in the Bitcoin dollar chart. If you have a look, the left-hand shoulder where volume is the highest, this is quite typical when you start a potential turning pattern. And as we go through the pattern, the volumes start to decrease. Reason for that, as most of you will be aware, is people who are trying to, or big players who are trying to sell their orders in the market. They don't want to spook the market. They don't want to start flooding the market with their sell orders and cause price to run away from them. So they're trying to phase or bring their orders in slowly. And over the course of the left shoulder, head, and then the right shoulder, you should see, or I am seeing, volumes going down when we're at a market extreme. In this case, we were over 60,000. So the likelihood of a big institution or a big, what they call whale, someone who owns a lot of Bitcoin in the market, trying to sell their Bitcoin can be quite high because they might have bought from a long time ago and price is an extreme. So we see this volume going down, and that is until we get either a fake out or the breakout to the downside, which is the break of the neckline. So if you can see, there's three potential areas on the chart. I've marked it A, B, and C. A is where people might anticipate the break of a neckline, and it fakes out. B is where you actually get a breakout on this 30-minute chart. It closes below, and you see volumes going up before price fades back in again. And then it's the third and final time when price finally breaks out and the volumes are the highest. And you'd expect to see this because as price goes, those either whale or the institution or whoever it is that's trying to put a big order in starts to then fill their order quicker as price gets away from them. They realise that price is no longer going to be sitting above 60,000. They don't know how far it's going to fall. So they start to put their order in more, as well as other sellers come into the market as well. And you get this huge increase in volume as price breaks. So time and time again, I am seeing, when it comes to volumes on head and shoulders, the spike on the left, volumes then being reduced throughout the head and shoulder pattern. But then as you get the fake out and the breakout, and it doesn't always fake out, but in this case it has, the volumes spike. So I've attached the chart there. In subsequent videos that I'm going to make, I'm going to look further into head and shoulders and other patterns as well to show you things that I'm noticing in the crypto market that may well help you with regards to holding a longer position or when you might want to be selling and or reducing your position.